You're watching the world leader in business news, CNBC. Hello, everyone. Welcome to Street Signs. Our top story at this hour: America's top monetary policymaker sees some turbulence in the oil markets for some time to come. But Federal Reserve Chairman Alan Greenspan is upbeat about finding a solution to that, saying energy efficiency is already bearing fruit. Now, our senior economics reporter Steve Leisman joins us from the New York Economics Club, where Mr. Greenspan has just finished speaking. And Steve, it turns out that in the question and answer session, his comments on housing far eclipsed anything he had to say on energy.
That's right, Ron. I guess we have to begin with bubble, toil, and trouble. The chairman, for the first time, I believe, using the B word as in bubble to describe the national housing market, and the F word as in froth. Give a listen.
It's hard not to see, one, that there are a lot of local bubbles, and indeed, even without calling the overall national issue a bubble, it's pretty clear that it's an unsustainable underlying pattern.
Now, the thing we can speculate that the chairman means is unsustainable are prices rising as much as they have been, because he did go on to say that prices are unlikely to fall. Now, no sense, Ron, immediately of what the Fed would do about that, but we did get a warning about a month ago. Fed Governor Don Cohn gave a speech that we reported warning about housing and talking about speculation in the housing market, and he suggested that higher Fed funds rate were the answer because it would draw savings away from perhaps the riskier markets, including housing. Now, that was echoed again by Chairman Greenspan, who said he saw significant acceleration in turnover of housing and also speculation in the mortgage market. As to the direction of the Fed funds rate, the chairman was asked whether he believed we had already hit or perhaps passed the neutral Fed funds rate, and the chairman said very specifically, we do not agree with those who believe that. Translation, Ron, Fed funds still have higher to go, according to the chairman here at the Economic Club in New York. Ron?
Steve, I want to talk a little bit more about the commentary that Mr. Greenspan made on housing, because, you know, not surprisingly, given our coverage of the housing market lately, and mine in particular, we've been getting angry emails from viewers who are saying, you know, get off this topic, you know, that it's not a bubble, you know, there's only so much land, you know, God only made so much land. Why are you guys on about this? Mr. Greenspan, after denying the possibility of the B word in real estate, and again saying that there's no national bubble, is focused on those some potentially disruptful local area problems, right?
Right. Well, Ron, a couple things we can say that we know for sure about the Fed. They're most focused on the sanctity of the banking system and the stability of the economy. And to the extent that the housing market would endanger either two of those, the Fed would be likely to express its concern. Perhaps we're getting at or close to that level, Ron. And the second thing we know about the Fed is the tech bubble haunts it, and whether or not it should have acted sooner. So the question is whether or not the Fed feels like it can play a role in cooling speculation now in a housing market through words before it has to do something more forceful through interest rates.
Let's talk about that, though. The Fed's been raising interest rates for a year now. They've raised the Fed funds rate 8 times. Long-term interest rates have actually come down since the Fed started doing this, roughly. So they can't really do it necessarily through the interest rate structure. Can they do it through banking regulation that would, in fact, restrict credit in the housing market, much as people at the time suggested in 1996 that the Fed raise margin requirements in the stock market to have some impact on psychology?
Well, Ron, you're absolutely right that there are other conduits for the Fed to act on in the banking sector. I have no personal knowledge that the Fed is doing that, but one of the things the Fed can do before that is it can, through the regulatory process, begin to ask questions of banks and begin to scrutinize the lending portfolios. Part of what they're doing, obviously, the Fed chairman yesterday talking about Fannie Mae, trying to limit those portfolios over there. The Fed can begin, through the New York Fed, which oversees the big money center banks, can start to talk to banks and say, look, we're getting nervous about this. You ought to be a little more nervous, too. That would be before any specific regulatory action, Ron.
All right, thanks very much, Steve Leisman in New York. All right, as for the markets right now, we're seeing a little bit of a downdraft in stocks, although it is not a terribly large one. In fact, the Dow has had a pretty good performance in the last couple of weeks. The blue chips off about 23 points, just below 10,500. The NASDAQ, meanwhile, softening up just a little bit, by a point and change, but moving back towards the unchanged level, as you can see, and the S&P down 2.5 at 1188.59. This market's had a pretty good rally in recent weeks. Crude oil, meanwhile, amid Mr. Greenspan's commentary, began to sell off after Mr. Greenspan talked about higher inventories may be pushing down oil prices, and oil has broken decisively now below $47 a barrel, which was deemed a key technical level. It's off 52 cents now, or more than 1%, to 46.40, and down nearly $12 from its all-time high of several weeks ago. Let's go to the New York Stock Exchange quickly now to check in with Mary Thompson for the latest on what's happening in stocks. And of the markets we're looking at today, Mary, stocks seem to be the quietest.
Certainly, it is a quiet session, as you pointed out, Ron, but it does follow very strong performance for the Dow, the S&P, and the NASDAQ. NASDAQ up 5 days in a row, Dow and S&P up 4, the biggest 4-day gain for the Dow in 6 months. So we're seeing a little bit of consolidation, but again, volume is a little bit lighter than what we'd seen in the past 6 sessions. Yesterday's volume, I should note, was a little bit light as well, maybe suggesting that the rally that we'd seen had run out of steam. So again, today, consolidation, the markets today, on light volume. Also, we are seeing in the markets, the home builders were hit by Greenspan. I'm going to detail that a little bit later. Question that some of the traders are tossing about today is, what is the message of the markets? Where do we go from here? Keep in mind that one trader told me is that energy typically leads at the end of an economic cycle. Well, if you look at the year-to-date performances, refiners, marketers, as well as oil and exploration stocks have been among the best performing groups. But in the last month, there's been a turnaround there. They have been among the weakest performing groups. So what groups do you want to look out when indeed there is a change in the economic cycle? Well, if energy was the leader, what picks up the lead next is tech. Tech's typically in transports. We haven't seen transports, at least this month, lead the markets, but we have seen strength in semiconductors and also some of the cyclicals like retailers, which also tend to lead when you, again, start a new economic cycle. So these are some of the things they're tossing around in today's session. Let's go to the home builders, because again, when Greenspan said there's a little bit of a froth in the home building market, this hit the home building index as the S&P home building index took a tumble, and then as we take a look at some of the home builders that trade here at the New York Stock Exchange, you can see that dip right when those comments from Greenspan pass by. As you can see, some of these home builders today weaker across the board, again, in what's been a pretty much weak session here on the big board. Ron?
Thanks, Mary. Sure. Mary Thompson at the New York Stock Exchange. Now, although the markets are giving back some of this week's rally, we saw the NASDAQ rise to a 2-month high earlier on. And today's Street Smarts, we're asking the question, is a market correction in the rearview mirror now? And if so, where can investors look for leadership in the next leap forward? Something that Mary just alluded to. John Bollinger is president of Bollinger Capital Management, who joins us today happily live in studio. And by the way, tonight, John's going to receive the Market Technicians Award for this year. Congratulations on that.
Well, thank you very much.
The guy who came up with Bollinger Bands, a significant contribution to technical analysis. So this is maybe long overdue.
Well, I don't know if it's long overdue, but it's a huge honor, and I'm completely floored by being selected for it. The list of people who have gotten the award in the past are just incredible, and it's an incredible company to be in.
Well, congratulations. It's good. Now, before we get to what's going on in the stock market, let me ask you about Mr. Greenspan's comments, because you and I have talked about the notion of a housing bubble before, and you're one of the people early in my career who taught me about bubbles, who recommended the book Some Extraordinary Popular Delusions in the Madness of Crowds, which chronicled not only the South Sea bubble and activities in France, the Mississippi scheme, but also the tulip mania in Holland. What does this housing market nationally look like to you, even if Mr. Greenspan doesn't want to attach a B word to it?
Well, I think he's probably attached a B word to it, or will get around to doing it soon. Greenspan's very much a market follower. He looks at the markets and tries to get in sync with them. It's one of his more endearing characteristics, if you will. So I would think that they will act in some ways to try to dampen the housing bubble. Are we allowed to use that word?
Look, I mean, we get a lot of hate mail when we do. I've used it for quite a long time now.
You know, and so some of the interesting ways that he could, I've already been hinted at. Fannie and Freddie can be leaned on pretty heavily. Yeah. They can be made to reduce their portfolios through regulatory, or just, you know, by nobbling, just by mouthing them and telling them, you know, back off of this. But a lot of the mortgage market is now in independent hands. Yeah. And a lot of these 0% mortgages that are being passed out in California, the fueled a lot of the speculation. A lot of those aren't being passed out by regulated businesses like a bank.
Other intermediaries are doing it.
Yeah,
Right,
exactly.
So in fact, the home builders themselves are involved in financing the homes, right?
Exactly. So that's going to be a little bit harder. So I think the interest rate puzzle is going to be a big part of the picture. I don't think that we're done with the interest rate cycle. Here, you pointed out we've had 8 rises. I think we'll see, 4 more at least. And I think they'll stick to that measured step. They're very happy with the idea, with the way it's worked, or so it seems.
John, you and I lived through the bursting of the local bubble in the LA markets in 1989 and beyond. That had a pretty profound effect on the local economy. If we have a serious break, what happens to the national economy? Should there be enough pain associated with the turnaround in housing here that people would actually feel it?
Well, the difference is, we'll look at the difference first and then the similarities. Yeah. The difference was that we had base closings, and that really hurt the Southern California economy. So you had 4 years in which they roughly doubled housing prices, 86 to roughly 90, 90 to 94. They roughly cut them in half again. Right. I don't think that we're going to see a similar national macro event that will coincide, can be mapped onto the base closings that we saw in California. So I think it'll be a much milder idea in the map, in the national thing. I think what will happen is it will remind people that investing is a business. Yeah. It's a job. You just can't go out and buy real estate and expect it to perform the way you want. It may perform the way you want, but I think people are going to have to take a look at stocks and bonds again.
All right, just a few seconds left. What are you doing in stocks right now?
Well, very pleased with NASDAQ leadership coming out of this correction. Very pleased with the idea that there may be some tech leadership showing up here. The healthcare area is also a very vibrant area that we're showing some new leadership. So we're exploring those areas, trying to figure out exactly what the proper opportunities are. Clearly, we've seen in this correction what we call a rotational change. The old leadership is not looking like the new leadership. And we're very pleased with the idea that, technology is getting going here. If you look at long-term charts, when technology is rising, it's generally a pretty good thing for stocks in general.
All right, we'll leave it there. John, good to see you. Congratulations on the award. Thanks for coming in studio today.
Thank you so much, Ron.
John Bollinger Capital Management. Coming up on Street Signs, tire makers and auto parts gaining a little traction in the market today. Our auto reporter Phil LeBeau is ahead with the latest. Plus, also, Beijing boosts textile tariffs, but the Bush administration says that's not going to stop U.S. efforts to control textile shipments. What does that signal for U.S. China relations? Our guests Don Strassheim and Steve Hanke will face off. And later, guest Paul Johnson from Boston Cabot gives us today's take on our hot commodity. Those stories and more when Street Signs comes back.
You're watching Street Signs on the world leader in business news, CNBC.
Last year, Norfolk Southern and its shipping partners took hundreds of thousands of freight loads off the highway. In fact, they've invested millions to convert even more traffic in the coming years. So it's easy to see how the economy won't be the only thing that benefits. Norfolk Southern, the future of transportation.
Roberta, I can see you as a file clerk. You ever thought about that? It's a great way to meet eligible lawyers. You have to think about your future. File clerk. Yeah.
File clerk? Have you ever considered becoming a lawyer?
That one thing you've always wanted to do? It's still out there, just waiting for you to say, hello, future. Call your advisor about the powerful resources of Lincoln Financial Group.
Still to come on Street Signs, United's turbulent negotiations with some of its unions, and then China raises textile tariffs. The Bush administration says it's not enough, and we'll take apart auto parts as well.
A 210 horsepower PowerTech V6, 2 available four-wheel drive systems, 5,000-pound towing capacity, and one feature that really attracts attention. The new 2005 Jeep Liberty.
I just got Verizon DSL service instead of cable, and I'm glad I got it.
It's $29.95 a month for Verizon.
I mean, what is that? It's $1 a day.
They doubled the speed, and the price stayed the same.
Verizon DSL is so fast, it's like lightning.
The DSL thing has got me flying.
Verizon Online DSL is now twice as fast, and it includes all the great features of MSN Premium. Not so with cable.
Now you get pop-up blockers,
firewall, an antivirus thing,
and parental controls.
Parental controls, that's huge.
It's still just $29.95 a month.
I'm loving it. I'm saving a ton of money.
They give me all this stuff, and it's inexpensive. $29.95 per month.
Plus, when you call 1-888-670-1375 now, you'll get a wireless router and modem in one at no extra cost, so everyone can be online at home at the same time.
I had a lot of choices.
But I want Verizon DSL.
Call 1-888-670-1375 to get it all for $29.95 a month. Compare that to cable.
It's definitely a no-brainer.
The Group of 8 will not become the Group of 10, at least for now. Two departing Morgan Stanley executives have agreed not to join the dissident former officials who are trying to restructure the company from the outside. Morgan Stanley got the promises from former top investment bankers Terry McGee and Joe Perella in exchange for payments of millions of dollars in bonuses and other benefits. Checking shares of Morgan Stanley today, they are down 16 cents at $49.99. Well, China is raising the export tax on a variety of textiles to help diffuse the trade dispute with the United States and Europe. The change involves 74 separate lines of textiles and takes effect June 1st. The American Chamber of Commerce in China calls the move constructive, and France hailed it as important. The textile dispute has heated up the debate over the valuation of China's currency. Now, Washington warned Beijing on Tuesday that China could face trade sanctions unless it took steps to free up the currency within the next 6 months. Well, China hopes by raising export tariffs it will also reduce outside pressure to revalue its yuan. Here to put China's decision in context is Stephen Hanke, applied economics professor at Johns Hopkins University, also senior fellow at the Cato Institute, and Strassheim Global Advisors President Don Strassheim. Gentlemen, it's good to see you again. Thanks for being with us. And Don, let me start with you with respect to this decision by Beijing to import these, self-impose these textile tariffs. Will this be enough to satisfy the West? Or we've already heard from the Bush administration they're not quite happy with what's being done at the moment. Where does it take us from here?
Ron, nothing is going to be enough to satisfy Washington in terms of China taking these kind of steps. This is a small step. It's 12 cents. It's 1 yuan, 12 cents per unit, whether that's a pair of socks or a pair of trousers. It's a small number. The total revenue take is going to be maybe $100 million on China's part. Walmart and Gap and all these American companies are going to continue to source from China because it makes economic sense to do so.
Now, Steve, it may not make political sense. So what do you see as the political fallout from what is, as Don just described it, a nominal or token effort on the part of the Chinese to reduce the surge of textile imports we've seen recently?
Well, I think the real problem here is that it really is a precursor of what might become a trade war. And if we get into a trade war situation, it does have implications for the markets in general, because right now risk is priced, I think, inappropriately at a very low price, a low level. And if a trade war really starts unwinding, we'll have a huge repricing of risk. And
Why do you think
emerging market bonds, stocks, junk bonds in the U.S. corporates, that kind of thing, will just continue to be repriced, because trade really is the engine that runs the global economy.
Steve, why do you think there is a growing risk of a trade war when everybody kind of dismisses that notion out of hand?
Well, that's exactly what, if you look at what's going on in Capitol Hill,
yeah.
These guys are mercantilist fanatics, and after all, it's playing well. If you look at the opinion polls, the protectionist card is being played, and it's playing very well. It's very unfortunate because it will come back to haunt particularly the U.S., because most of what the U.S. is proposing to do vis-a-vis China is completely illegal. It'll end up just like this crazy Byrd Amendment of 2000 that was signed by Bill Clinton, supposedly a free trader, and the WTO has ruled that that Byrd Amendment is illegal.
Yeah, Don, let me ask
Ron,
you. Don, let me just phrase my question for you though, because what Steve just suggested is that the U.S. is a mercantilist, or the Congress anyway has mercantilist tendencies, but so does the Chinese economy. It's not like we're dealing with a free and open system there. So what's wrong with demanding fair terms and maybe even a revaluation of the currency to better level the playing field, Don?
Well, everybody wants free trade, but they want it to be fair, and they complain that the other side's not playing fairly, and so they're going to kind of stick it to them in one way or another. But for the last 50 years, there have been 50 threatened trade wars and 0 actual trade wars, and I think that's again the case this time. Both sides have too much to lose. On our side, we want to keep importing those cheap products and going to Walmart and going to Target and someplace else to buy that stuff. We have easily as much to lose as the Chinese do on this side. It's a negative-sum game. Both sides know it. We'll work our way through this.
Now, Steve, with respect to revaluing the yuan, Alan Greenspan came out today and said it probably, even if it were revalued, wouldn't have that much of an impact on the U.S. Current account deficit. Do you think China needs to do it or not?
They do not need to. They have had a fixed exchange rate since 1995. It served them very well in the Asian crisis and throughout the last decade, in which they've had growth exceeding 9% a year and inflation that's actually been slightly less than the United States. They will not, and they should not, change the fixed exchange rate. What they will do, they have a very clear game plan to gradually make the capital account free, take the exchange controls off the capital account, and in doing that, they will move to a free fixed exchange rate system. And that's exactly what they should do. The only time they've been in one of these big revaluations in the past, by the way, was in 1934-35 period, when they revalued the yuan and went into a tremendous deflation and famine and so forth in China, and that paved the way, according to Milton Friedman, for the nationalist government to fall, and ironically, the communists to come to power.
Don, I'll give you the last word.
The communists know this very well, and they will stick to this fixed exchange rate, which they should do.
Don, I'll give you the last word. Would you agree with Steve's assessment there?
No. They're going to, the Beijing Olympics in 2008 is their target. They want to be regarded as a full-fledged member of the global economic community. To be so regarded, they have to have a currency that's freely floating and freely convertible. It's not. It's pegged. They're going to get there in steps. I think they'll take the first step towards a revaluation this year, 3, 5, 10%, add a little band, plus or minus a few percent to that, and a few other steps. But Steve is absolutely right. They have to make changes in the capital flow controls, and they have to make changes in the banking system elsewhere in the financial sector. We're not going to be happy with how fast they do it, but they're going there, and I believe that they should.
All right, gentlemen, thanks very much. Steve Hanke, Donald Strassheim, appreciate your joining us today.
You bet.
Thank you.
Coming next, one of the oldest names in the appliance business gets a new lease on life, plus shares of auto parts supplier Visteon leapt to its best levels in about 2 months today. CNBC's Phil LeBeau delves into what's driving that stock higher. We'll have those stories coming up. But first, today's Streetwise question. After Mao Zedong's death in 1976, who became the next leader of China? We'll have that answer when Street Signs comes back.
You're watching Street Signs on the world leader in business news, CNBC. CNBC's Ron Insana.
There are very few other places, if any, that can break financial news the way CNBC can. And we as a group have grown up in an industry that keeps moving faster, and thankfully we've been moving faster along with it. People have to have some financial security, and the only way they can do that in the future is to plan today, and that's the benefit of CNBC.
Ron Insana, only on the world leader in business news, CNBC.
Now we have to get to our traffic report. Let's do that. How about that traffic report?
Traffic is horrible this morning. I get the feeling.
People are trying to get to work this morning.
Speaking of
Introducing the Acura RL with the first real-time traffic monitoring system through AcuraLink. It can help you find an open road. And with 300 horsepower and the world's most advanced all-wheel drive, it knows what to do when it gets there.
We're really trying to get you the traffic report.
Oh, you know what? My mother forced me to take that in.
The all-new Acura RL.
Okay, Mr. Mover and Shaker, that's enough trading for today.
I just need...
Mm-hmm.
Weak earnings reports are driving technology stocks downward in early trading today. Economic news is mixed in overseas markets.
Ow.
He's okay.
Not a day to be on the sidelines. And look at that. 5 minutes before the closing bell, tech stocks are staging a huge rally.
It's hard to trade online when it's even harder to reach a computer.
Nurse? Hello? Dr. Steve?
So Ameritrade introduces Trade Triggers. It automatically enters your trades when the market hits conditions you specify. Trade Triggers, another 21st century tool from Ameritrade, where every internet equity trade is just $10.99. Join now and get 30 commission-free trades. Be ready when the market moves, even if you can't. Call 800-441-8451 or go to Ameritrade.com/auto.
Who's ready for a sponge bath?
Is this the help desk?
Yes, it is. We're researchers.
We're close to a breakthrough.
How can we help? It'll take us 900 years to crunch the numbers.
There's too much data.
You need Gene.
Gene? What can Gene do?
You can sequence the human genome, fold proteins, and wrangle quantum chemistry. You can do all that? Well, I'm not Gene. This is Gene.
Gene's a computer.
Fastest in the world. Can he help us?
That's why he's here.
Help desk.
He's a computer science professor from Iowa. He's slightly distracted. And this is Take On Orbitz, the game that pits other travel services against Orbitz.com.
Today's contestants need a hotel in Hawaii for under $100 with a golf course. Ready? Go.
Dad.
Hotel reservations?
Yes.
Dad.
Done. Orbitz makes it easy to find the right hotel at a great price.
Next time, Orbitz.
Breaking news on CNBC.
We have a news alert now. We want to go to Washington and our Rob Reynolds, who has confirmed a story that has been swirling in aviation circles.
Sources confirm to CNBC the U.S. Air America West merger will be announced this afternoon, just following the close of the markets on Wall Street.
The biggest stories are on the world leader in business news, CNBC. You're watching CNBC, minding America's business.
All right, after Mao Zedong's death in 1906, who became the next leader of China? The answer, if you don't know, is Deng Xiaoping. Well, news that appliance maker Maytag is being taken private is driving gains today, not only for Maytag, but for rival Whirlpool as well. Maytag's board revealed it accepted a $14 a share buyout offer from the private equity firm Ripplewood Holdings. Maytag has wanted to expand globally, but has been held back by a large amount of debt. Checking shares of the appliance rivals today, Maytag and its repairmen doing better by 2 3/4 points. Whirlpool is up $2.64 at $68.15. And shares of auto parts giant Visteon soaring today on news that Ford may buy back as many as 15 factories from the firm. Visteon stock is up more than 20% today, but it's got a lot of ground to regain, having slid dramatically over the last year to $6.50 today, is up more than 28% in this session. Well, as part of a big traffic jam in auto industry news today, also including a hot new offering from Chrysler and Hyundai's big American investment. CNBC's Phil LeBeau has the latest now from Chicago. What's going on, Phil?
And Ron, we're going to talk about Hyundai as well as Chrysler's new offering in just a little bit. But first, we want to touch base on the parts makers because that group is getting a bounce that we were talking about earlier this week. Look at the pop today from Delphi, Visteon, American Axle, Borg Warner, and Magna. We had the chart up just a few seconds ago. All of these stocks are moving considerably higher today. The fuel is coming from Visteon. As you mentioned, the primary news here is the report out of Detroit that Visteon will sell up to 15 plants back to Ford. That's all part of an effort by Ford to stave off bankruptcy at Visteon. Of course, that's critical because Ford does not want one of its largest suppliers to go into Chapter 11. Meanwhile, Visteon has a new president and COO who comes over from the parts company Lear. This does not mean Visteon is out of the woods, but there is a little more optimism that Visteon and the other major parts makers are taking the steps needed to keep those companies from sliding into bankruptcy. That may be the case, but that hasn't stopped Fitch from lowering Delphi's unsecured credit rating today. One of the big problems at Delphi, the same one that we're seeing at Visteon and really all of the parts makers, less revenue from General Motors. That's because GM is making fewer cars and trucks. So the parts makers are still in a bind, but there's more hope today than a week ago. Quickly, we want to talk about Hyundai. They have just opened their first plant in the United States in Alabama. And as for Chrysler, the new Charger is going to be hitting the streets June 1st. And Ron, that's going to be a big hit for Dodge, perhaps the third in a row, and that would be critical if it were to be a hit for them, helping them with their turnaround. Quickly, one last thing, Ron, I want to talk about United. We're waiting for some word from a press conference at bankruptcy court here in Chicago. A judge has heard the closing arguments in a case about whether or not to throw out the current contract with the Machinist Union. He will make a decision by May 31st. Meanwhile, United and the Machinists continue to talk in hopes of averting a strike that might come down if they cannot work out a deal and if the judge throws out that contract. Ron?
All right, thanks, Phil. Phil LeBeau in Chicago. Coming next on Street Signs, a check on today's headlines and how they're affecting the markets. Plus, more agony at AIG. A New York grand jury taking a look at evidence from Attorney General Eliot Spitzer today. We'll tell you what's at stake. Also, we'll take a look at the sizzling returns one commodity is reaping from the red-hot real estate market and whether there's still time to get in on the action or whether we'll see some lumbering moments in that market. Street Signs is back in just a moment.
Street Signs on the world leader in business news, CNBC. Today on Closing Bell, tech's caused drama in Hollywood. Find out why the movie industry hates the internet and what it's doing about it. Closing Bell today, 4 Eastern on CNBC.
Schwab Street Smart Pro. We're talking a stock screener with 140 criteria to help hone your search. A sector tool that shows which industries are moving. And conditional alerts that trigger automatically. All in one advanced trading platform. All for just $9.95 a trade. Schwab Street Smart Pro. Test drive it now at schwab.com/pro.
They're right behind me.
I see him.
Go south.
Head for the roof.
That way. I sent the package overnight.
Should be there by 8:30.
Should be there? Trust me, he'll be there.
The most trusted color on Earth. UPS. What can brown do for you?
Visa Signature. More than just a rewards card. It can magically turn all sorts of wishes into reality.
Give me a kiss to build a dream on.
Like getting you into practically impossible to get into restaurants at exclusively reserved tables. And since Visa Signature has no preset spending limit and is accepted at millions more places worldwide than American Express, it's everything you need to make your wishes come true.
Nice play.
With Visa Signature, rewards are just the beginning.
All right, still to come, Eliot Spitzer goes after AIG with a little help from his friends, and then Street Talk with Art Cashin, and we'll take a look at this week's hot commodity as well when we come back.
CNBC's Mad Money.
My goal is to try to make you rich.
You've never seen a business show.
You need to watch it every day. I'm sticking my neck out.
So insanely entertaining.
Are you ready, Ski Daddy? It's the lightning round.
Mad Money, weeknights at 6 and 9 p.m. Eastern, only on CNBC. Sunday, right after cancellation, the legendary lightning rod of network news, Dan Rather. Topic A with Tina Brown, Sunday, 8 Eastern on CNBC.
Great rescue in progress.
Is there a problem, sir? I'm quite sure I was doing the speed limit.
Oh, that's right. And you stopped at every red light and stop sign. Sir, you are a safe driver. I'll need to see your insurance card.
My insurance card.
Worse than I thought. You're paying too much for car insurance. I'll have to write you up.
AIG Auto Insurance will stop at nothing to save you money on car insurance. And safe driver discounts are just the beginning. Call 1-888-AIG-6876 to find out how much you can save. With low rates and all these discounts, it could be hundreds of dollars. And if you ever do have an accident, we're on call day and night.
I will take care of this right away.
Smart man. My work here is done.
Wherever there are safe drivers, we'll be rescuing them from inflated rates and unresponsive service. Call 1-888-AIG-6876 for a free rate quote. AIG. We know auto insurance.
Welcome back to Street Signs, everyone. Making news at this hour. Federal Reserve Chairman Alan Greenspan foresees some turbulence in the oil markets for some time to come, but also sees signs of a solution being found as inventories build up. That has been putting pressure on crude oil prices of late, although today oil has been quite volatile, trading down as much as more than 70 cents earlier in the session, only to rebound possibly on some short covering late in the day. Oil prices have recovered from a Greenspan-inspired sell-off just a little while ago. Now, China says it's raising tariffs on some 74 lines of textile exports in an attempt to defuse the trade dispute with Europe and the United States. Oil prices right now, as we close out the day, getting back to Mr. Greenspan for a moment, are currently quoted up 8 cents. You could see after Mr. Greenspan had his talk in New York about oil prices and real estate, oil sold off rather hard, but looks like it's ready to settle right at $47 a barrel. That is a key technical level. Well, New York Attorney General Eliot Spitzer has begun presenting a grand jury with evidence that could lead to criminal charges in the mess at AIG. Shares of Dow component AIG moving against the Dow at up 93 cents today at 53.93, while the broad market has been generally lower throughout the day. Our senior correspondent Scott Cohn joins us now with the latest. This is the first we've heard, really, of criminal charges in this case. It was believed it could be settled civilly. Maybe not.
Well, it still is believed it could be settled civilly against the company,
right.
But there are individuals who've been on the hook all along, and really maybe now. We're told by a source close to the case that this New York State grand jury has only recently begun its work, which means any indictments could be months away if they come at all. But the very existence of a grand jury clearly raises the stakes for AIG executives, current and past, including, of course, Maurice Hank Greenberg, who was ousted as chief executive in the flap over the insurance giant's accounting. Greenberg has not been charged with anything thus far, and his spokesman declined to comment. So did spokespeople for AIG and Eliot Spitzer. Also potentially troubling for Greenberg and others, at least one AIG executive, Senior VP Joseph Umansky, is testifying under immunity. AIG, the corporation, is, as we said, unlikely to face criminal charges as a result of this probe. Eliot Spitzer has said in the past that he is hopeful for a civil settlement with AIG, again as a corporate entity, and sources say that is still the way things appear to be going. The company has already admitted to improper accounting and has had to delay filing its annual report with the SEC. All of this comes from the story we first reported here on CNBC last October, Eliot Spitzer's investigation of the insurance industry, and you can see the toll it's taking on AIG's stock as we look at a one-year chart. The stock is up today, but off considerably since that investigation broke back on October 14th of last year. What started as an investigation of payoffs and bid rigging has morphed into an investigation of insurance transactions used to mask poor financial results. The SEC and state insurance regulators are also involved. So again, Ron, we're looking at individuals who now could be on the hook for criminal charges, but that too could be months away.
This was one of the most well-respected insurance companies in the business. Mr. Greenberg, one of the biggest philanthropists in New York, a billionaire himself after having worked at the company for, 35, 36 years. This is an unexpected, wildly unexpected turn, really, ultimately, in the fortunes of this company.
It certainly is. It's fairly stunning. I mean, the company in and of itself is, and this is a relatively small segment of the company that's affected, but of course, from a prestige standpoint, when you have the Attorney General, the SEC, all these state regulators now looking at every aspect of this company, and the cloud of criminal charges against individuals, some other executives that could be let go very soon, at least according to reports, it is a pretty stunning turn.
Thank you, Scott. Coming next, 10 movers in a minute. Then we'll get the unique insights of Art Cashin from the floor of the big board. And later, if a tree falls in the forest, a lot of people hear it. Today's hot commodity is lumber. We'll talk about it when Street Signs comes back.
You're watching Street Signs on the world leader in business news, CNBC.
Where are we supposed to put the video conference room?
There's no walls.
What's this?
Your video conference room.
We need a desk.
Simplicity, powered by Cisco.
Our brokerage firm really wants your business, so let me introduce you to the team.
Hi, I'm Annual Fees, my associate.
Quarterly fees?
He's small, but watch out.
Hello, I'm Hidden Charges. Pleasure.
Who's he?
Inactivity fees. He's our secret weapon.
Experienced investors don't put up with hidden fees, and at Brownco, they don't have to. With $5 trades and low margin rates for the active trader. Brownco, a brokerage service of J.P. Morgan Asset Management.
Thanks to Sprint, ING Direct customers don't have to go to the bank. The bank goes to them. Online or on the phone, ING Direct has been able to give customers reliable, secure access to their accounts with zero service interruptions over the Sprint Peerless IP network. With Sprint, ING Direct is secure, convenient, beautiful. Detailed case studies at sprint.com.
The great ones elevate their performance. On the biggest stages, with the highest stakes, they're able to summon something extra, and by sheer will, produce wonders. As a global energy leader, expect big things from ConocoPhillips, and watch our performance elevate.
Improve your credit at CNBC.com on MSN. You'll get helpful tools and advice from experts to maximize your credit rating. Now at CNBC.com on MSN.
It's the ultimate apprentice showdown. Who will win?
And who will be the apprentice?
The Apprentice finale. Tonight, 8 Eastern and Pacific on CNBC.
An apprentice-sized reunion as Donnie welcomes all your favorites from season 1 and 2. The Big Idea with Donnie Deutsch, tonight 10 Eastern on CNBC.
All right, stock prices still a little bit underwater today, but doing relatively well given the four-day gains that we have seen. In fact, could be a possibility, an outside shot here, that the Dow can make it in plus territory by the end of the day, even though oil prices rebounded at the end of the session and interest rates have backed up just a little bit. All right, now a look at today's 10 movers in a minute. Let's start with 3M slumping after Smith Barney advised investors to sell the stock. It's down 76 cents at 77.10. Instead, it's recommending GE, the parent of CNBC, because of its stronger growth outlook on a relative basis. GE up now above $37 for the first time in quite a number of months. ExxonMobil's been ordered by a federal judge to pay roughly $1.3 billion to more than 10,000 gas station owners. They were allegedly overcharged for gasoline from 1983 to 1994. The stock down 1.25%. Meanwhile, Occidental Petroleum is paying ExxonMobil $972 million for a stake in its oil and gas production. Occidental up a dime at 68.22. And pharmaceutical firm Depomed says it's won FDA approval for a drug to treat urinary tract infections. That stock up 40 cents at 4.47. Pete's Coffee and Tea being added to the S&P Small Cap 600. The stock up $1.33 at 28.20, while used car chain CarMax skidded after it slashed its profits and sales outlook. Stock's down $1.90 at 26.50. Sharper Image near three-week lows on weak quarterly results and a gloomy outlook. That stock down 210 at 11.84, while Apple is recalling 128,000 rechargeable batteries for its iBook and PowerBook computers due to a potential fire hazard. Apple down a penny at 37.54. Prudential downgraded American Eagle Outfitters amid concerns the retailer may have overstocked on denim for the back-to-school season. The stock down 81 cents at 26.90. All right, there is less than 9 minutes left in today's trading week. Let's go to the floor here at the New York Stock Exchange, check in with Art Cashin, Director of Floor Operations for UBS Financial Services. And after a four-day rally, the market's actually holding in pretty well here, huh?
It's holding in very well, Ron, and they look like they want to take a run at plus territory. They'd love to make it 5 days in a row. Unfortunately, the volume is very anemic. I mean, this is a double witch, an exploration, and the run rate right now is between $1.2 billion and $1.3 billion. So that suggests you may have used up some firepower in Wednesday's 100-point run-up. People may have settled up their contracts a little early.
All right, now, what's important to this market? I mean, we heard Mr. Greenspan talk about oil today. We heard him talk about real estate, and we heard him talk about interest rates in New York. Did any of that affect markets outside the areas discussed?
Not at all. I mean, with all due respect to Mr. Greenspan, he garnered a lot of headlines, but didn't seem to be a real market mover. I think he was being extra careful not to rattle markets. He said things like housing prices are up. I don't think he used the word asset bubble, but there was some of that. And then he quickly reassured everybody, but I really don't think prices are going to come in that much. So this looked like one of those classic Fed, oh, don't be afraid of things out there speeches.
Even though we're going to raise interest rates some more.
Yes.
What's important to this market next week, Art? And particularly if we should close up today, you get 5 days in a row. That's relatively unusual.
Well, it certainly has been. And I think what's going to be very important next week, Ron, is going to be the FOMC minutes. You and I discussed yesterday and earlier in the week that we've had a lot of Fed speakers this week, but nobody has come out very bluntly and given us a look at where the Fed's true direction is. They've gone a little opaque on us again. So FOMC and GDP and some more Fed speak.
All right, thank you, Arthur. Have a good weekend.
You too.
Art Cashin of UBS Financial Services. Up next, lumber, a hot commodity. We'll just ask the crowds at Home Depot, or our guest in the hot commodity segment, Paul Johnson. Street Signs is coming back in just a moment.
You're watching Street Signs on the world leader in business news, CNBC.
If there's one thing baseball fans can agree on, it's Major League Baseball on XM satellite radio. Every team, all season long. And now, for a limited time, buy an XM satellite radio and get a second radio free, so you can enjoy even more music, news, sports, and talk. XM satellite radio.
There's an even better way to care for your nest egg. Objective financial advice. A.G. Edwards. For 118 years, fully invested in our clients.
They're right behind me.
I see him.
Go south.
Head for the roof.
That way.
I sent the package overnight.
Should be there by 8:30.
Should be there?
Trust me, he'll be there.
The most trusted color on earth. UPS. What can brown do for you?
You're watching CNBC. Minding America's business. Sunday, right after cancellation, the legendary lightning rod of network news, Dan Rather. Topic A with Tina Brown, Sunday, 8 Eastern on CNBC.
Today on the closing bell, the state of the software sector. Two analysts with two very different opinions on where you should put your money will be our guest starting at 3 p.m. Eastern Time. That's coming up on the closing bell.
Get a great big bottle of Myometer measurement.
A fiery horse with the speed of light, a cloud of dust, and a hearty hi-yo silver. The Lone Ranger.
Television.
Honey, now wait a minute. Now wait. I can explain nothing.
It started out simply enough.
One small step for man.
A cathode ray.
One giant leap for mankind.
Classic characters. And a nation transfixed. A box that serves as a portal.
So ends a nation divided.
A window.
As the wall comes down.
And a mirror. And as it evolves, we follow its every move. Loyal to the end. With top-ranking customer satisfaction, 100% digital quality picture and sound, and a commitment to providing the very best TV experience, it's time. It's time to rethink TV.
Standard & Poor's has raised its outlook on Georgia Pacific from stable to positive, saying it expects the company's financial profile will continue to strengthen. Georgia Pacific has reshaped its business mix in the last few years with some major divestitures. The company is now focused on its better performing segments, including consumer products, packaging, and building materials. Checking shares of Georgia Pacific and its major forest product rivals. Weyerhaeuser's down today, so's International Paper, but GP's up 38 cents on the day. Well, April housing starts released earlier this week, and they beat expectations wildly and sent this week's hot commodity lumbering along, so to speak. We're talking about lumber, and joining me now to do that is our Paul Johnson. He's a specialist with Boston Cabot, and of course the president of the company as well. Good to see you, Paul. Thanks for being with us today.
Oh, my pleasure as always, Ron.
All right, let me ask you about what's going on in lumber. I mean, we've had some pretty volatile moves in that commodity. How are we ending the week?
Well, actually, they had a little bit of a sell-off after sort of a meteoric rise almost that we've seen in the last week and a half. They recovered. They had a nice gain over 6 months from November to about March, and lost it all through April, and got halfway back just this last week and a half, as I said. They're selling off a little bit after some of the great news that you've talked about, and some of the numbers are really outstanding. They obviously are attached very well to the housing market.
Now, let me ask you about the chart we're looking at right now, where we saw, a series of tops on the left-hand side, and then one big run-up from November through March, and we have since come down rather decidedly. Is lumber now in a bear market and just retracing some of its losses and leading what might be a slowdown in housing, or do you think we're going to make another run for the record books here?
Well, if you look at what some of the home builders say, their numbers are to show great confidence. You're seeing record mortgages, for applications for new purchases. You're seeing permit numbers that are the highest in 32 years. Of course, we set a record just recently, but you're seeing some great numbers that say, you know, we get some bad news. Look what happened. All of April, you saw things head down because you saw weakness in the economy, but it's coming back as far as the strength goes. These numbers are right. Let's jump on board again and see some higher lumber prices.
All right, now what's your upside target? I mean, obviously resistance would be the old high, right?
Yeah, you'd have to see some of the resistance. I think you're actually probably going to trade in a range from the March high to what you saw at the beginning of this month low in here for a little while till we could see a few more numbers that perhaps show some greater strength. And look to some of the things Greenspan says. I think you may see, you know, people sort of moving one way or the other. You know, hedge funds had moved into the lumber world a little bit, so we've got some plays there that are making the lumber commodity that is move even more like a volatile commodity as people move some money in and out of that marketplace. So I think the range is set, but you know, it's going to move wildly within that range as we've seen over the last month and a half.
All right, now very quickly, Paul, before we let you go, with respect to lumber, what about some of the ongoing disputes the United States has with Canada over wood product imports? Is that likely to be resolved sooner, or is that still a factor that moves the market from time to time?
Well, you'll have some effect. I think, you know, about a third of this country's lumber comes from there, and it depends, I guess, on what the confidence vote is for Paul Martin in Canada. If everything goes well for him, that should bode well for Canadian lumber imports into this country.
All right. Always a pleasure, Paul. Thanks for being with us today.
My pleasure.
Paul
Thank you.
Johnson of Boston Cabot. Coming next, a little trend watching. We'll take an in-depth look at the Asian markets. Given all we've heard about China this week, we'll talk about all that when Street Signs comes back.
You're watching Street Signs on the world leader in business news, CNBC.
Now we have to get to our traffic report. Let's do that. How about that traffic report?
Traffic is horrible this morning. I get the feeling.
People are trying to get to work this morning.
Speaking of
Introducing the Acura RL with the first real-time traffic monitoring system through AcuraLink. It can help you find an open road. And with 300 horsepower and the world's most advanced all-wheel drive, it knows what to do when it gets there.
We're really trying to get you the traffic.
Oh, you know what? My mother forced me to take that in.
The all-new Acura RL.
Do you, Morgan Ambrose Robert, take this woman to be your lawful wedded wife?
Of course, that very much depends on what you mean by the question, do you? Forward-looking statements involve risk and uncertainties. We're opening up a can of worms here. No single answer readily presents itself. I mean, have we really explored every avenue? Have the parties made certain representations, warranties, and agreements in connection with the merger? Do the parties agree to be subject to the satisfaction of the regulatory approvals as required to consummate the transaction? Who amongst us will ever know?
I do.
I pronounce you man and wife. You may kiss the bride.
Less talk. Make it happen. The Royal Bank of Scotland Group.
Today on Closing Bell, tech's caused drama in Hollywood. Find out why the movie industry hates the internet and what it's doing about it. Closing Bell today, 4 Eastern on CNBC. This show is money.
My goal is to try to make you rich.
Mad money.
Are you ready, Ski Daddy? It's a lightning round.
Weeknights on CNBC.
Well, Gap Incorporated is taking a beating today, at least in part because of remarks from its CEO. Paul Pressler told analysts the company's women's clothing offerings have lost their focus. Gap marketing executives think they have regained it with what's called fresh, casual American style. But the new designs based on cotton and denim aren't likely to have an impact until the holiday shopping season later this year. It's been a rough day for shares of Gap today, which, as you'll see here, are down 44 cents, more than 2% to $21.31 a share. Well, in today's trend watching, with all the talk of China and the revaluation of its currency and the imposition of textile tariffs self-imposed by Beijing, we thought we'd take a look at some related markets, which some of which have pegged currencies still, some of which do not. The Hang Seng Index has been very strong in Hong Kong. You know, as you recall, Hong Kong, even during the worst of the Asian stock market and currency market debacles in 1997, was able to maintain its peg against the dollar thanks to its large foreign currency reserves and also some deft maneuvering by its central bank. When Hong Kong was handed back to Beijing many years ago, the stock market reached an all-time high of about 18,000. It sold off sharply after that, as you can see, and has begun to climb quietly back into favor with international investors. The Hang Seng Index closing today up modestly at 13,717. It has performed well in recent weeks. Now contrast that to the Shanghai Index, which has flirted with a series of 6-year lows, closing down more than 4 points today at 1099. Taiwan, which is in the crosshairs of a political battle between the West and East, has been volatile of late, today losing about 16 points at 59.54, but you can see it's working closer to its high than it is its more recent low. South Korea, which this week said it may want to diversify its currency holdings, is up about 10 cents on the date. That's the Kospi Index at 952.19. The market has had a pretty good move since April, but has consolidated some of its recent gains. Now, two countries that were, of course, at the center of the currency concerns in 1997 and beyond have performed as follows. Malaysia, which has run up recently, is one of the better performing Asian markets, as you can see, and the KLE, that is the KLSE composite, the Kuala Lumpur composite, down about 4 points at 883.17. It's had a pretty good run this year. Singapore, which has been among some of the better performing Asian economic tigers in terms of the way their economy has performed, has also done very, very well lately in stock market terms, adding another 6 points, as you can see today, to 2173.77. Before we wrap, though, we should recap what has been a very decent week for this market. You know, the Dow has been up, as have the other major averages, 4 days in a row. It has been a sizable increase in price for the major averages lately. We've seen a good string where the Dow has had its best performance this week since the November elections. You can see the takeoff there on Wednesday and to an extent to Tuesday. The Dow holding here at 10,472, down about 20 points on the day after it made a run towards the unchanged level. The NASDAQ now in the plus column and holding well above 2,000 today, up 2 1/4 points. A good week for the NASDAQ after a lot of volatility in the last several weeks. And the S&P 500 paring its losses down about 2 points at 1188.93. One of the more interesting markets today, of course, was the oil market, which was hit by Alan Greenspan's commentary at the New York Economics Club. Crude oil, which at one juncture was down more than 70 cents and well below $27 a barrel, a key technical level, rebounded by the day's end, picking up 33 cents late in the session to 47.25. But you can see that afternoon plunge there that took crude oil prices down to about $46.40 or thereabouts. Now, among some of the more interesting areas of the stock market as well, we saw that home builders came down when Mr. Greenspan started talking about local bubbles in the real estate market, and also discussed some excesses in mortgage markets as well. Well, thanks for watching Street Signs. We'll see you again on Monday. Here's a look at what's coming up on the closing bell with Tyler Matheson. Hi, Ty.
Ron, great. Thanks. Have a great weekend. Today on the bell, much more on the markets as Ron just teed up. It has been a big week for the Dow, for the NASDAQ, and the S&P. Let's see how it all ends. Plus, two software analysts with very different opinions on which stocks you should buy, if you should buy, in that sector, and why the smart money, some of it at least, is zeroed in on options these days. As we head into the most important hour of the trading day, split ticket for equities, the Dow down, but NASDAQ has just nosed into positive territory. We'll be back with the closing bell after this.